How this works in both directions in the market. I'd like to show examples, both bullish and bearish. And so the concept is very simple. It's like W.D. Gann used to talk about, the confluence of time and price. Very important concept, by the way. And yeah, you really need to understand, a lot of people understand the concept of price, and we're talking about really both here, even though the video is titled Price Action. But it's price action in relation to time. And if you haven't learned about cycles or timing, then, well, you're in deep doo-doo, frankly, because there's only two axes on a chart, right? I mean, you got your y-axis over here, and that has price, and a lot of people look at that, and that's good. But the only other axis is the x-axis, and that's time. So the chart is a two-dimensional object, and that's it. That's what you got to work with. So if you are not real familiar and becoming an expert on how to evaluate time, then, well, you're messed up. You're going to not be able to ever establish a probability scenario because that's 50% of the information on the chart. So how are you going to get us taking profits from their long positions, right? They're going short, and they are going short aggressively, aggressive short selling. Now, that means that and there's people coming in periodically if you look at this. So actually, let me just clear it here. You can see it as clearly as possible. So we get and by the way, the market's just been kind of, floundering a little bit here, right? Nothing too dramatic. In fact, there we even get a triangle pattern. Comes back up. Okay, boom. There's your first pretty strong impulse move. Then that's just a little bit of a clue, though. And then the market goes sideways. Ooh, that's beautiful. That's a beautiful short continuation pattern. Why? Because it means there's not a lot of people coming in and buying, right? The price action doesn't go up a lot like it did over here. So over here, you have up, down, up, down, up, down. Here, you have down, sideways. And this means maybe profit taking or shorting. We'll just make it simple. Shorting, buying, shorting, buying, shorting, buying. It's a little more complicated than that. But the point is here, shorting and no buying or very little buying. Well, when you are taking the position in one direction of the market or another, in this case, if you're short, you don't want a lot of buyers coming in, right? You don't want Merrill Lynch, Goldman Sachs, Citibank coming in and buying with huge size when you're short. So what we got here is probably just a little bit of profit taking. And then what happens is you get more people coming in and shorting and saying, oh, here's an opportunity. Gosh, looks like we broke. Maybe they're looking at these lows here or something. We just broke below that low. Didn't get back up above the support level. Just kind of went sideways. And so people are saying, oh, okay, cool. So I'll come in and I'll go short too, because it's still pretty early in the move of this breakout of this complex pattern here. And so bam, another impulse move down. Now, again, what happens? Is there any buying coming in against this? No. In fact, this one is even a little better shorting signal than that, because you get some consolidation in the sense that you get narrow range bars, especially with regard to the opens and closes, the real bodies, as they call them, but it's still going down. Now, the angle, the slope, isn't as steep, but it's still drifting on down. So again, probably just a little profit taking from people who shorted wherever up here. And some people are going to take some profits. Good, typical money management. Very wise, actually. And then other people are coming in and they're saying, wait a minute, dang, this thing's really taking off to the downside. Maybe I'll join the party too. And so they do. And get your next impulse move down. Bam. Okay. And again, a little bit of just kind of sideways movement. One last impulse move down. Now, this is the end of the party. This is where you definitely don't want to go short anymore. Actually, I wouldn't have even probably gone short here, because I'll give you a little extra tip. How are we doing on time? We're doing okay. I'm going to give you a little extra tip I wasn't planning on doing. So of course, nothing's 100% in trading, but if we got short from up here, the typical pattern, and again, let me clear the board here to make this more clear for you. When I say typical, I mean where your odds are. Your odds are here. 1, 2, 3, 4, 5. After 5, if you want to call them waves or whatever you want to call them, sections, periods, I don't care what you call them. But after this, I'm going to call them waves for the sake of argument right now. After 5 waves, that is about the average pattern when you get these very aggressive, sharp-angled moves. Now, this one happens to go 7. That's fine. Hey, the average wouldn't be 5 if you sometimes didn't get 3 and you sometimes didn't get 7, right? So, like I say, now here's the key though. Now we come back up. Let me ask you this. Would we want to short here? We got a little cycle high there. Would we want to short there? Absolutely not. And this is one of the top dog trading rules, is that we never take the first cycle high after a dramatic angle down. Again, not just the angle, but we're measuring the relationship of time and price. So, covers a lot of price, a lot of range in a short amount of time. That's the pattern. When that happens, now, everybody, some people got in, some people probably got in over here, someone got in there, somebody got in here, some people came in here. Everybody in their parakeet now who wanted to go short has gone short. Okay? I don't know if parakeets trade or not, but anyway. So everybody in their goldfish, their cats, grandmothers, etc. So that's the problem. Now, everybody who wanted to go short already did. In other words, this play that people were watching is done. Nobody's watching that anymore. People are over it. So they're over it psychologically, but they're also thinking, well, now, hey, if I go short here, I'm late to the party. I already missed out. Everybody else already, made their money. And they're right. That is. Now, is this 100% of the time? Does this ever go back down, make a lower low? Yeah, sometimes. But really, do you want to put your money on what happens sometimes? No, we don't trade the exception. We trade the rule, and the rule is where the probabilities are. So who cares about the exceptions? So that's the reason we don't. Again, the top dog trading rule is do not trade a first cycle high after a dramatic move down. Dramatic in this case being defined by a wide range and a short period of time. So never take that short. Never. Now, sometimes I will actually take this long. I'll wait for it to put in a little cycle low here and go long. Now, that one isn't as, it's pretty good for a scalp trade. It's pretty highly reliable as a little scalp trade. But it doesn't mean the market's going to, go off and you're going to get a tremendous reward to risk ratio out of that. That's like 50-50. But what you definitely don't want to do, I'm not saying you should go long here. That's a little more aggressive professional type trade. But you definitely don't want to go short. This is when to stay out of a market continuation, if you will. How to know when not to get in. So part one, I showed you when to get in. Part two, I'm showing you danger signals of when not to get in. By the way, I see this as a shortcoming in a lot of trading courses, is that they show you, oh, here, trade this setup, trade that setup. Okay, fine, that's all great. Obviously, we want to know that. But what happens in real life, and I know this from my own experience as well as working with thousands of students, is that sure, people look for that, and then, the real high probability setups, they don't occur as often as people would like. Then they get bored, and then they start looking for things that go beyond what they were taught, beyond their methodology, beyond their proven rules. And so then you start thinking you see stuff that you should trade, even if it's not in your lessons or course that you took or whatever. And we just have this impulse that we want to take it. I've done it. I'm guilty. I'm raising my hand right now. Absolutely. That's how I know this. It's because I've done it too many times myself. So the point is that if you're only shown what to do, then you're left to your own devices when the market's doing a lot of nothing, or things that are low probability trades. So what I'm saying is you should be taught the low probability trade setups as well, so that when you see them and you don't know they're low probability, you don't get drawn in like a siren into the rocks. Because it's for me, over trading was my number one problem. That was my cardinal sin of trading, over trading. So I had this kind of problem all the time. So I had to learn, and I did learn. Well, part of how I learned was taking, certain trades that they wouldn't work out over and over and over. But most people, they'll just document what does work. I documented what didn't work. So in the future, when I saw that, I'd be like, oh, it looks good. Oh, wait a minute. No, I've seen this 100 times before, and it rarely works out. You need to know those two to keep you out of danger. This is what will prevent you, or at least help prevent you, from making a lot of money and then giving it all back. Have you ever had that experience? You made a lot of money in the market for a while, and then you ended up giving it all back. Well, this is one of the reasons that can happen. So, very important to learn setups that actually don't work. Who teaches that? Well, I do. And I think you want to know it because this is what preserves your capital. So anyway, I hope you found that helpful. Feel free to leave comments below. And if you have anything to add to this that you want to share with others, what you feel you can add value to others in this discussion, feel free to add that in your comments as well. The best thing you could do is to share the video, because that spreads the word and it really encourages me to continue to create more free trading tutorials for you. And one of the things I'm going to do for you today is give you one of my free courses. Absolutely free, no charge. And it's got 5 videos, a little mini course, so it's very manageable. Just 5 15-minute videos or so. And in that, it's not just theory, but I actually give you one of my favorite trade setups, a real trade. It's called the rubber band trade. And in this trade, it's a nice scalping trade, very high win-loss ratio. That's why I kind of lead with this trade, because people love to get a high win-loss ratio, and so do I, don't we all? And so this is the one I start everyone out with because it gives them a good experience, They start making some money, and then they like me, and I like to be liked. So anyway, feel free to get the rubber band trade strategy. Click the link in the top right hand. Bye.